More banks in turmoil. Hey, everybody. Hope you're doing good. You're watching Bull to the Bust, BX4, back with another dose. Let's get right into it. Another regional bank is in big trouble, and we're going to show you how this is just the tip of the iceberg. Now, a lot of people aren't really surprised that we're seeing another bank in trouble. A lot of people on this channel actually are surprised that we haven't seen more banks get in even bigger trouble. Well, we know what's keeping the banks propped up right now. It's a zero reserve requirement, but there's something very important that happened to this bank and that's happening to other banks as well. So this bank, New York Community Bank, the shares plunged. We're going to talk about that in just a few minutes here. Actually, you bring it up side by side here. A bank that rescued another bank that failed back in March 2023. So what could go wrong, right? This bank absorbed the assets of a failed bank. So now a bank that's already underwater and has loaned out way more money than they actually have, that's bad enough. Now they bought out another bank that failed. I mean, this was only a matter of time. I'm really surprised it didn't happen sooner. So basically, what happened is this bank, their assets now are more than 100 billion. So now they're going to be subject to stricter reserve requirements. And they're going to have to put away more for losses for future loans. And here's what happened. Here's a 5-day chart. They cut their dividend because of this extra funds they want to put away now and put aside or set aside for future loan losses. And you can see the stock plunged. We see we're over $10, plunged down to $6, dipped down to 575. Some people are saying this is a dip buy. Let me bring up a bigger chart here. And if you go to a 5-year chart, you can see it may be a buying opportunity. We've seen these other dips where the stock just came right back. Look at this one in early 2023 when all banks went down because of the fear of contagion. And it had dipped down there to about 650 and then went back up to a high of 14. So you could have doubled your money if you would have got in at the bottom. Will any of you be doing that on this stock? Are you confident that these banks are going to be propped up, or is this going to be another failure? And it may not be a failure. It may get bought out by another bank. To me, that's still a failure. They should still call it a bank failure when a bank has to get bought out. So we'll have to see. I personally am not going to be dip buying this bank because it's all about what people decide to do, what regulators decide to do, what the FDIC, the Fed, the Treasury all decide to do. They may come in with a huge rescue program, print trillions of dollars, and keep these banks propped up. I don't think so. I think ultimately we're going to see a big swath of banks fail, but it's just too hard to tell when it's all contrived or it's all controlled by a few select people that decide who lives and who dies, if you know what I mean. So I'm not going to be doing a dip buy. But this bank is not much different than many other banks. Yes, they bought some troubled assets, but there's troubled assets in all the banks right now. All of the automobile loans are in trouble. All of the commercial real estate loans are in trouble. The home loans not in trouble yet, not in trouble yet. But that's because the homeowners have been pretty resilient and have been able to keep their head above water for now. But look at all the ways homeowners are keeping their head above water, borrowing against their home, taking record amounts of loans from their 401k, borrowing from the future, racking up tremendous amounts of debt in the background to keep their mortgage payment current. So there's something brewing still in the housing market. It just hasn't really shown its head yet, but it's definitely brewing. And we know that there's a lot more bank turmoil to come here down the road very soon. Now let's go ahead and go out to a longer term chart here. Same bank, New York Community Bank. And you see the stock really hasn't did much. It's had some ups and downs, but it's been trading kind of in a range for years between the lows of $5, $6 up to 13, 14, 15, 16, $17. So at the most, if you bought at the very bottom on one of these dips, you would have doubled your money, maybe tripled your money, or close to tripled your money. If you bought it like 575 and it ran up to 17, it's very hard to get in at the exact lows and get out at the exact highs. So you're lucky if you doubled your money, but again, I wouldn't be a dip buyer in this. It's just too risky in my opinion, and there's too many things that have to happen to keep these banks afloat. And the thing that I think is going to happen is a lot of consolidation, a lot of smaller banks, regional banks failing or getting bought out by the big mega banks. Now, this wasn't a big mega bank, but the problem was last March 2023, so many banks failed. It was so many billions of dollars. They couldn't just have the mega banks rescue these banks because it was just so large. They had to have a lot of different banks kind of chip in that allowed this rescue to happen. But what's happening now and what's going to happen in the future when the banks that rescued the other banks, now those banks are in trouble? Can these rescues just keep going to bigger and bigger and bigger banks? That is the question. And sure, they can come in and create trillions of dollars at the click of a mouse and bail all these banks out, but that's not going to fix the problem unless you just have a constant stream of bank rescue funds flowing into the banks, which in that case, you might as well not even have banks. You might as well just have little Fed branches of the Federal Reserve on each corner, because that's essentially what it is. It's a bank just only operational because of a continuous amount or continuous flow of funds into the bank, from the big, the ultra bank at the top, the central bank. So the insanity continues, folks. Will it stop? No, it's just going to get weirder and wilder, and we have to just keep an eye on all these different things to figure out, what we're going to do to navigate this. And part of it's investing, right? So if I was going to be a buyer in this, I would sure tell you. I happen not to be too enthusiastic about buying this particular stock, though. Also, to add to the problems with that bank, deposits are down. More people are pulling their money out of the bank. A lot of times it's just to get by because we see the savings rate is plunged. So people are now having to eat into their savings now just for month to month bills. And so I don't see things getting better. And I was actually surprised that there wasn't more bank failures, but I'll be really surprised if we don't see a lot more in 2024 than we saw in 2023. And another thing too about that bank, about that New York Community Bank, the CEO should have known that when they grew their assets beyond $100 billion, that they were going to be subject to these stricter reserve requirements. And that's the reason why so many people sold off the stock, is because they cut their dividend and basically they scared a lot of investors away. And with what happened last year, a lot of people are skittish about holding bank stocks, rightfully so. So when they heard that news, they kind of panicked. So I wouldn't be surprised if this stock did recover. I wouldn't be surprised if they got rescued by a bigger bank. If it comes to that, we'll have to see. We'll have to keep an eye on it, of course. Another statistic giving you an idea here of what's happening with the economy. January hiring was the lowest for the month of January on record. On record, we were told how strong the labor force was back in early January when the jobs numbers came out for December. We see the January hiring was the lowest on record for the month of January. Of course, layoffs surged in 2024 in January, and it's going to get worse until they start just deleting debt or just getting rid of people's debt. Spending has to decline. Look what happened to UPS. UPS was over 2,000 layoffs, and people were surprised because they just heard the news over the holidays that so many people went out and bought gifts and did record holiday spending. Well, they got less. They bought less, so there was less packages being shipped. Just ask UPS. But people paid more, so they paid more and got less. But the business news channels try to put that out there as a good thing. Look at all this spending. They didn't tell you that people are getting a lot less for what they're spending. And of course, UPS came out a few days ago and announced the layoffs, and it became obvious to everybody since then. On a separate topic, but still financial, San Diego, we're getting a lot of floods here still, a lot of flood waters. And actually, a friend of mine had their home flooded, and they found out while they were in Paris, France. So I had to wonder. I didn't bring this up with them because they're going through enough right now without me, asking them this. But they had money to travel to Paris, France. Did they have money to buy flood insurance? In other words, people in San Diego, most people anyways, do not buy flood insurance, and that's true throughout the United States. I mean, unless you're in select areas where you're prone to floods, and there's guidelines you can look up and there's records you can look up to see if you're in a flood area. Most people don't buy flood insurance. The point I was trying to make, though, was people sometimes don't buy one thing to enable themselves to do other things. So what if they would have bought flood insurance every year for the last 10 years? Maybe they wouldn't have had money to travel and to go to Paris. So you see, you're trading off risk, or you're playing the risk by not getting a certain type of insurance. Most people don't have earthquake insurance here in California. Also, it's just so expensive. But people still go to the football games, they go to nightclubs, they go to bars, and they travel and they spend money. So you're choosing what to spend money on. If you're choosing not to buy insurance, you're opening up some risk. You may never get a flood, but if you have a flood or have something happen where you're not covered for, maybe an earthquake that you didn't buy the insurance for, then you're gonna wish maybe you didn't travel. And all I'm saying, people like to spend money, they like to do recreational things, but we all have to decide, what our risk tolerance is and what we're not going to buy, or what kind of safety net we're not going to purchase, right? So insurance is a safety net, but if you went out and bought every type of insurance available, flood insurance, earthquake insurance, because those are optional on top of regular insurance, you're going to be spending a lot of money, and you may not have much money left over, and your life may be pretty boring. You might not be able to travel. So we all have to decide how we're going to allocate our funds, so to speak. And I feel really bad for anyone that's losing home or property to flood or storms, any of that. It's very unfortunate, and it's going to keep upward pressure on home prices with home shortage, and this is going to take up more supplies, more materials to rebuild all these homes. Flood damage, a lot of times you pretty much have to reconstruct the whole house, tear down, and a complete rebuild. In some cases, not always, there's flood remediation places that can sometimes do things and get rid of the mold and dry things out, but it's very expensive. All right. So in other words, think really hard about what you're going to do with your money. Keep stacking. We're going to wrap this one up today, everybody. See you very soon. Please give us a thumbs up if you like what we talk about, and we'll see you back here on this channel again. Bye for now, everybody. Peace.